right.
Hello.
GM, I'm back.
GM, everyone.
And we have a new friend, Prakhar.
Nice to meet you all.
Yeah. So Gokce, I missed last week. Unfortunately, I was at DAS, Digital Asset Summit, here in New York. But I heard the update went well. Looking forward to hear what you have for this week. The markets have continued to be entertaining, for sure. I think what we'll do, since we have a new guest, maybe Prakhar, maybe you could do a quick intro of yourself, and then we'll turn it over to Gokce for her market update.
Sounds good. First of all, thanks a lot for having me here. I've been interacting with Dexalot on and off, but I think this is something which was much needed for quite some time. So I'll start with a quick introduction about myself. My name is Prakhar. I'm founder CEO of Quboid. I've been in the development side of things for around 13 years now. The first company that I started was in the Web2 space, where we built products for healthcare tech segment. Ran it for 3 years. After that, it got acquired by InterHealth, which is a Canadian healthcare CRM company. After that, I started working for Deutsche Bank as a quant analyst, quant trader. I was trading in different derivative OTC instruments like IR swaps, inflation swaps, options, futures, and other things. So during my stint over there, I observed one thing, that even though these investment banks look flashy from outside, but the way they have been settling and pricing their trades internally was pretty archaic, right? At that time, I authored a white paper on internal trade reconciliation and settlements using blockchains. It got a lot of audience and other things, but looking at the size of big banks, especially the sort of regulations that are around them, it was tough to execute them. Then I moved to another early stage startup called Cognitive Scale, where we did the similar thing for Barclays. And during the process, got 2 patents with USPTO on designing and implementing trade settlement and reconciliation engines using blockchains.
Okay.
So after that, I moved back to India, joined CoinSwitch as one of the early team members, leading their engineering teams. So CoinSwitch later turned out roughly to be more like a Coinbase for India. And I think currently it has close to 20 million users and one of the biggest exchanges in India. Then I left CoinSwitch in late 2021 to start Metasky, which is now Quboid. At Metasky, which is now Quboid, we have developed a fascinating way of settling, pricing, and reconciling loyalty points and brand tokens through a decentralized network. So I think in the next 1 hour, we'll get to know more about Quboid, the things we have developed so far, and where we are currently in our stage.
Okay, that brings up a lot of questions, but I'm going to hold off on those questions until we have the market update. So, Gokce, what's going on in the markets?
Since the last 2 hours, Bitcoin is falling a little bit, but we had a nice bounce since Sunday. Is the uncertainty about Trump's tariffs just a little bit lower right now, so the market's priced that. So we couldn't pass 88,000. As this feels like this is profit realization point for the market. And also the most anticipated question currently is, are we going to all-time high, or is it just a relief rise in the market? I will share some metrics. I believe this is just a relief because uncertainty is still going on, even though the markets are pricing a little bit better currently. First, I want to look at the altcoins. Almost all of them are in green. Only BNB ecosystem is a little bit lower today. Other than that, altcoins are doing good. And also looking at the BTC pairs, they outperformed Bitcoin for the last 3 days. So I'm looking at the funding rates, for example, and currently they are lower. This increase in the market started in November as Trump's campaign. And looking at the funding rates and also the volumes during those times, that was much higher. Currently, the volume, this is the 7-day average, the volume is very low compared to those levels. So this feels like, looking at the funding rates and the volumes at the exchanges, this is the total volume. I feel like this is just a relief rally. And also, I'm looking at the ETFs. Even though the price increased Monday and Tuesday, there was an outflow from the ETFs. So institutions were selling, as you can see it here. So this feels like, as we talked last week as well, there is still downward risk because the uncertainty is going on. Also, we are waiting for the PCE data coming on Friday. So also for the last thing, I want to talk about what can be the dip for the market if it is not 76 for this cycle. I believe that we can go as low as 73,000, or maybe the point that we can go 73K was the last year's top. Also 69K was the last cycle stop. So these levels feel like they can be the dip for this cycle. So yeah, this is a quick summary.
Sure. I appreciate that. I think that's sort of along the lines of what I'm sort of thinking about as well. We're certainly range bound until we get better information or more concrete information on the tariffs. Again, I think I mentioned it 2 weeks ago that April 2nd is a very important day. It's what Trump is calling the Liberation Day. So, and basically we'll get a better idea globally on where these tariffs are. I'm beginning to sort of see some people like on Bloomberg or so talking about the fact that his bark is louder than his bite. And I think that's probably going to be the case. You've sort of seen that over the last two and a half weeks, the administration has been very quiet, or more quiet on tariffs as they were 2 weeks prior to that, right? And 2 weeks prior to that, they were very, very aggressive, and talking about Mexico, Canada, and China. So I think on April 2nd, you've sort of seen that tone calm down a little bit, and in turn, on Sunday there were a little bit better, or at least Trump was a little bit more muted about tariffs, and I think that caused the markets to rally into Monday. And then yesterday, I think he sort of flip-flopped a little bit. He was very aggressive on one thing, and then he said something very soft. So so I think we'll continue to have, we're going to be range bound, and so looking at next week is April 2nd is next week. So we'll have a pretty good idea on tariffs, and then going into June, again, we still have Xi Jinping expected to meet with Trump. That's going to be a pretty major news event for sure. And at the same time, we're expecting the Fed to continue to cut. So we'll see what happens. Obviously, data is very important. So PCE is on Friday, right? So we'll have to continue to monitor the news as well as macro data. So.
Yeah, I agree. Also, we had the worst first quarter for Ethereum for the last 6 years. So I feel like we are just post-halving and post-election. And during this year, I mean, looking at the years just past halving, we should be performing much better. So I feel like the first quarter was one of the worst ones. So I believe we will see some green quarters just because of that.
Yeah. Okay, cool. Well, thank you so much. Prakar, ex-Wall Street guy, which I wasn't aware of. So you went effectively from Wall Street into crypto. I guess my first question is, what caused you to go into crypto?
So, like my crypto journey started way earlier than like even way before when I started my first company, like during my college days. At that time, I luckily took some electives in economics, where in the classroom we were like getting taught that there are certain fiscal and monetary policies based on which different economic system works. But in parallel, there was this particular narrative coming out that there is a piece of technology where the fiscal and monetary side of running an economic system is something that can be baked into code, right? And this was like early Bitcoin chatter. So I also joined like one of the core development streams of Bitcoin Core, like more looking at it from the sidelines, but also getting to understand the perspective of people from that, how a community-driven ideation could, result into something that essentially impacts the whole world and the way we perceive currencies at the moment, right? So that was my start of crypto journey. Like it took a couple of years to get into a realization that, hey, this is going to be the full-time career path that I'm going to choose in, right? So at Deutsche Bank, I got the first sort of a very firm conviction that, hey, this blockchain as a set of technology or a set of tools could have a real world impact into things, where how the current system is being operated, as well as the way in which new business models can emerge up right from grounds up around decentralized compute, decentralized data verification, as well as essentially building a layer of trust on internet, right? So this was the main primary genesis, which is keeping me driven till date about building in this particular space.
Okay, great. And so then in 2021, I believe you said in 2021 you started with Metasky, which is now the Quboid, right?
Yep.
How did that transition happen? And maybe you could then talk a little bit about Quboid.
Yeah, sure. So like if we see the year 2021, that was the year when like the alts were at its full blaze, right? Like like Dogecoin was making people millionaire like within a week's time. But along with this, like as we were operating exchange at that particular time, we saw that a lot of retailers were coming in and losing a lot of money into these sort of abrupt price actions, right? And especially looking at the data from India, where like people were looking at crypto more like a get rich quick sort of a scheme, it was not playing out well for most of the people, right? And this essentially in turn was building out the narrative that, hey, that blockchain is the one where it's more like a funny money game. It's something that can't be taken out seriously and other things. But at that time, the ideation was to build a business use case, which in turn is sustainable, and also to be away from the financialization till the point we don't achieve a certain level of product market fit. Right. So at Metasky, which is now Quboid, the main core was to like in a way look at those core business models that are possible with blockchain as a set of technology, build it out, prove its worth and value to the market, and then move to the financialization part of it.
Okay. So now give me the elevator pitch on Quboid, right? Yep. So because I've looked at it, and certainly this should impact everyone that's watching, because I'm sure we all have some sort of loyalty points sitting somewhere. And recently I was flying on, I think it was like Delta Airlines, and I was on their website, and I had no idea I had miles that I could use to pay for a ticket, and I used it. I'm like, it's sort of you have all these loyalty programs, and I'm sure I've applied to probably over 10 of them, and I only look at maybe one, right? So what is the background? I guess how do I use a Quboid to sort of help me out?
Awesome. So, before I jump into Quboid, let's take a quick, like a 100-second primer on how loyalty programs have been working so far, right? And like why this is a fantastic business model, because I think 80% of the brands in one way or the other are using loyalty points or coupons, codes, and other things, right? So in a Web2 world, whenever a brand issues a loyalty point or a discount coupon, by global accounting laws, they need to record it as a deferred liability on their balance sheet. So it means that as a consumer, if let's say you make a purchase, you get certain points, and you're again going to use those particular points for a future purchase with the same brand. Essentially, it is eating out the margins of the brands, right? But on the other way around, it is like it's a very great mechanism for brands to increase the lifetime value on their customers, right? And that is why they need to record it as a deferred liability on the balance sheet. And against those deferred liabilities, they have all these different points, coupons, and other things that are out there. So this model was so great that there are many instances, multiple companies across the globe, where the value of their loyalty program is bigger than loyalty program of their whole company. One fantastic example around this is like Emirates Airlines, where I think around 4 years back, they split their company into two, where one company was looking more into the airlines business, and now there is separate company that looks into the Emirates loyalty program and the point systems that are out there.
Oh, wow. Okay.
So essentially, if you see the size of this current market, it's close to $500 billion. And this is the only asset class which comes in very close to how currency works, right? Like just like, how we pay for a ticket on an airlines, if we use points, essentially we are making the same sort of financial transaction. But the good thing about these things that these are governed by the laws of the company or the board of the company, and it is not the core business model of a country where currencies are actually therein, right? So from a compliance standpoint, it's a much more easier like area to operate in. So what we essentially do at Quboid, we go in, we stake the deferred liabilities that sit on the balance sheet of these companies and have a bond income mechanism against which we issue these loyalty tokens, right? So what this means that each and every loyalty token that is currently in a network are 100% backed by deferred liabilities that are sitting in the balance sheet of these companies, right? But when we tokenize these deferred liabilities, essentially we are converting those points into a standard, which is ERC20, that can be absorbed by a lot of other things that are built collectively in the Web3 space, right? And one of the biggest discoveries that we have seen in the Web3 financialization world are the DEXs, right? Where we have a mechanism in which through AMMs, we can provide liquidity for a good range of price points. So we do the same thing for different sort of like ERC20 version of these loyalty points. So it means that in practicality, for the brands who are currently live in a network, if you own or hold any of these loyalty points, you can swap it for any other loyalty point in real time and make a purchase with them.
Right.
So the brands essentially doesn't have to go and negotiate with all the different brands that, hey, the loyalty points which are in your ecosystem, how much value it is going to be out over here. The experience essentially becomes like that, hey, if you want to buy NFT that is in Avalanche ecosystem, but currently you are holding Ethereum, you can directly take your Ethereum to Dexalot, swap it for AVAX, and then use AVAX to buy that NFT. The seller of that NFT doesn't care about whether you are primarily holding Ethereum or Bitcoin, right? And the DEX ensures that till the time there is enough liquidity in the pool, they in turn are able to provide a price point for making that particular swap. So from this particular background experience, from the brand perspective, brand now in turn are able to attract a huge number of audience from their complementary brands. It means that, let's say, Nike would love to get those users who in turn are, let's say, shopping with Louis Vuitton, or who in turn owns an iPhone, right? So the brands can signal out the same sort of customer profiles across their complementary brand space. From a user perspective, like instead of having 17 to 20 different loyalty points sitting on their cell phone, they in turn can combine everything and buy or make their next purchase in a fashion where these points essentially result into something powerful, like something like a 60-70% discount or something that is completely free instead of getting just a 5% discount on a $1,000 purchase or something like that, right? So this is the whole core genesis where essentially we have produced a decentralized and an open source version of running a loyalty program where any brand can come in, plug in into the network, and instantaneously their points become interoperable across the whole number of brands that are currently in the network. And the end users, without even knowing that there is a crypto play behind the scene, can use them seamlessly across like a wide range of offers as well as complementary brand spaces where they want to go and shop with.
So right now you've been doing this for a few years now. How many companies have registered?
Yeah, so currently we have close to 32 brands that are operating in our network. And as we have a B2B2C approach over there, we have close to 2 million users who have like done a transaction with us so far.
Okay, so I guess the idea is really try to be the go-to place for tokenized loyalty points that people have, and really allow the loyalty points to be more fungible or more liquid, right? So as I sort of mentioned in my case, I'm sure I have all these different points from different vendors, whether they're hotels or just even yogurt shops or something like that. And I think in an ideal state, you want to be able to exchange it, one loyalty point for another loyalty point where I would really use it, right? For example, I'm going to a token 2049, as I mentioned, and I need to pay for a very expensive ticket on Emirates. So it would be great if I could aggregate all these disparate loyalty points that I have, exchange it all into Emirates, for example, and be able to use that. Is that a good use case?
Exactly.
Yeah.
Exactly.
Okay. Great.
Yep.
And I guess in terms of in terms of the companies that themselves, I think as a company, one thing I was thinking about was, well, if not as many people, I think you had mentioned a percentage. I sort of, and maybe you could repeat it, but if as a company you have all these liabilities, right, that's sitting on your books, but they're not, I would think that you sort of discount that liability because not 100% of the liability will ultimately get redeemed. But I think from an accounting perspective, I think what you're saying is they have to do 100% of it, right? And
yep.
Okay, but historically, that percentage or discount that you could apply to it is probably what, 60% or 40%?
Yeah, so this is a great question in the sense that like none of the company in the world would like to have a liability that sits on their balance sheet for a longer period of time, or let's say forever, right?
Right.
So that is why if you see that most of the credit card points or maybe like any sort of a brand coupon that you hold, they come with an expiry date. So expiry date means that as soon as they expired, they write off that particular liability, right? But this particular liability write-off essentially is a huge cost to the brand, right? Because they in turn have spent a lot of time, effort, resources in building out a particular loyalty program to increase their LTV and get the users back. So writing off their liability means that essentially their program is not working anymore.
That's true.
And if we see, and if we see currently, that number currently sits at around 24%. Because the initial loyalty programs were like fantastic. Like there's still a couple of loyalty programs that have been working really well. But just because there are so many loyalty programs out there, there is a sort of confusion within the end user base, right? Like at times people are holding points without even like having a memory that, they have this particular point in this specific app, right, for a purchase that they made maybe a couple of years back, right? So this in turn is costing a lot on the brand side. Also, another thing that we have been observing, especially in the FMCG market side, is that the traditional channels of marketing has been pretty much drying up, right? Like print media is something which is pretty much dead. If a brand wants to target Gen Z, and even if they get it on the front page of all the famous newspapers, I think the sort of engagement that is out over there would be pretty low. The second channel that is not working really well is other TV advertisements. So the two channels that are currently working out are like Facebook and Instagram, and Twitter for some of them. Both Facebook as well as Instagram charges the brands for the engagement and not for the conversion to sales, right? So that is one. And another channel that most of the brands are currently reliant on are the marketplaces like Amazon, and I think there are multiple marketplaces in each and every geography which are in turn localized to them. So first of all, marketplace increases the cost of distribution just because of the 15 to 30% margins that they hold. Second, that marketplace share no data about the end users who are buying the stuff from these marketplaces.
Okay. Yeah.
So in our case, whatever the deferred liabilities that they are staking in over here, this particular money is directly going to the end users, right? In a form of discount and in the form of coupons and other things. So the brands are using their dollars directly to pay their end users, as opposed to paying to a middleman who in turn is just charging them for the engagement and not taking any ownership about the end sale that is generated through this engagement. So this is the sort of a power of blockchain or decentralized architecture that we have in place that connects these brands directly to their audience and give the best sort of a value and return for the money that they are spending with these programs.
Okay, I see. Yeah, that makes a lot more sense for sure. And I guess from a user perspective, what should a user or someone watching, what should they do today on your platform?
Yeah, so currently we have three major interfaces through which they can come in and start using Quboid. One is called brands.fun. So brands.fun is the place where we are targeting way more crypto native users who in turn are holding crypto or who have their tokens stored in any of the decentralized wallets. So this is the place where they can come in, they can directly buy these tokens, the brand tokens directly, as well as participate in staking, providing liquidity to the pools and other things. They also have an option to participate in different brand-based quests. And these quests essentially will help them to earn the points directly from the brands. We have two another mechanisms. One is that we give a white labeled native app to the brands who want to use have a sort of a layer of their own branding on top of this particular network interface. So we currently have six apps on iOS store of different brands and 8 apps on Android Play Store, where they can come and download these apps, and whatever the points that they are earning, they will see a pretty huge catalog of the places where they can spend on. Another thing is that we also provide SDKs. These are for those brands who already have a loyalty program, and our SDK sits well within their existing loyalty interfaces or their websites, right? So these are the three places where they can come in and start experiencing what we have built at Quboid. We have some of the pretty interesting stuff coming in for experiencing the brands who are in Dubai during Token 49. So give us a follow on Twitter for just keep on up to date with these experiences that we are building specifically for Token 49.
Okay. Well, I'll be there, so I'll definitely check it out. And I guess in terms of looking at the crypto side now, I believe you indicated you're building it on an Avalanche L1, right? So
right.
What was the time? When did you launch the L1? And I guess there should be a token as well.
Yeah, exactly. So we launched our testnet in April of last year, and we launched the mainnet on 28th of December 2024. So like it's an Avalanche L1 that gives us the flexibility of speed, scale, as well as incentivizing users to run validator nodes. So QBE is the native token, which is also the guest token. So currently, QBE serves three basic purposes. One is that as this is the token in which the gas fee needs to be paid, but keeping in mind that loyalty is experience that is still pretty Web2 native, we give a complete gasless experience to the end brand users. So we do this through a relayer contract mechanism where the brands, depending on the number of interactions or the users who are using their interface, they in turn top up their relayer contract using the QBE tokens. Another thing is that within a DEX, on one side of the pool, one leg of the pool, there are the brand tokens, and on other leg of the pool, there are QBE tokens. This ensures the scalability as well as the way in which the brands doesn't have to think about maintaining liquidity across their partners. They just have to maintain liquidity between QBE and their brand tokens, and this ensures the interoperability of their native brand tokens across the whole network.
Right.
We have one major update that is still, I would say, 4 or 5 months down the line, where we give an ability to the brands to essentially run a validator node. So if they are bringing in like a volume that is above a specific point, then essentially the rewards on running the validator node essentially pays for the software layer itself. So there is no cost for the brand to come in and start using the software layer, but in the current model, they have to pay us. This is also keeping in mind that with the evolution of AI, especially in terms of building the end consumer apps, the sort of margins on running softwares or at the interface layer, it's a sort of a downward trend right now. So we essentially want to start competing against the world's biggest loyalty SaaS platforms, where we provide the whole interfacing, whole experience for free of cost, and they just have to pay for the network. So this essentially brings us back to the whole core of blockchain as a technology, where essentially everyone comes in, they contribute to the network pays them back, and essentially they benefit their core business.
Yeah, and I'm assuming that the more businesses that sort of interact with your platform, the more value it sort of brings to QB, right? Because of all the things you just mentioned, and I know that we're looking to list your token probably in April, right? Obviously, it depends on the markets as well. I think when we spoke a couple months ago, I think the plan was to do it this month, but it's definitely not a great market to be listing tokens in. So in terms of I believe you do have a special gift or announcement for our viewers as well.
Yes, there are two special announcements that we have to make today. One is the launch of Curious AI. So Curious AI is a sort of, I would say, an equivalent to like vibe coding to a vibe marketing, because see, marketing especially is a combination of creativity as well as data, as well as keeping in mind that the always changing narrative that is going on in the market, right? So I'll just share my screen and give you a quick lookout of how Curious AI looks like. And I think this will give you a lot more flavor of that, why some of the bigger brands have started working with us. So let me just go forward and share my screen. Okay, can you guys see my screen?
Yeah.
Coming up. Okay. Yeah.
Awesome. Okay. So we all know, and I think we all have been through a journey of both a learning curve on the crypto side and combining it with a marketing loyalty, which is in itself is a pretty complicated piece. So we have devised a way in which we absolutely remove the learning curve for the brands who can come in and start, working with us. So we have two major components of Curious AI. One is called BrandSphere. So BrandSphere is the place where the brands can come in and set target to their specific audience, because there are hardly any brands who like run a sort of a loyalty program or a marketing that is not targeted. Most of them are looking for a very specific segment in a very specific geography where they can spend money and see that how it goes on. So here they can come in and select the audience profile that they want to target. Currently, out of 2 million users that we have like around 1.3 million users where they have connected with their socials and other things. So we have a good profiling on that particular side. So on the demographic side, they can select the gender, the age, and other things, the purchase behavior that they want to target, social media interest, and other things. So as soon as they save it, they can see that how many customers they can target, what has been their click-through rate through all the other interfaces that have been in our platform so far, the number of the transactions, the engagement rate, and other things. Also, they can choose that what are the specific brands that they want to work with and what are the specific segments that they want to exclude. So especially when it comes to big enterprises, one thing we have seen that there are certain specific industries where they can't work with, right? Yeah. So these are industries like alcohol, tobacco, gambling, just because of the bylaws of the company. So they can exclude these specific companies, and our system makes sure that there is no interoperability of tokens, as well as the sort of coupons, points, and other experiences that this specific brand want to give out won't be visible to the users of these specific segments. They can also select that what are the complementary partners that they want to work with based on their brand characteristics, their redemption strategy, lifestyle, and other things. So it also gives them that how many brands they can set up a coalition with and other stuff as well. So once a brand comes in and set these things with us, we very well know that what exactly the brand is looking for, right? And this is where the major Curious AI comes into place. So this is like a deeply trained like LLM that focuses on the whole knowledge base of a platform, as well as some of the case studies about the past success criteria or past models that have been working well in this particular space. So based on this, like you can ask any question that like help me ideate on launching an engagement on Twitter. And you can set a budget and other things within a budget of, let's say, $10,000. So this essentially, we look at all the resources, the like possible interactions that they can build through our interface and deploy it for you. So this helps you in like creating different sort of bounties, or you can say that, hey, help me launch a brand token. So this will also like essentially help you in terms of creating the whole token, launching it in a sort of a no-code, low-code way. So this becomes a sort of a one-stop solution where the brands can come in and define what sort of customers they want to target, ideate on the models, deploy it, see how the engagement has been, as well as keeps on getting tips about what are the other things that they can do or nudge to do to increase engagement or increase the scope of their current program. On the end user side, we have on the reward section, depending on the profile of the user, the profile gets specific packages, right? So these are like Curious AI generated suggestions where they get suggestions like ultimate travel hack, where they get discounts from Indigo, JW Marriott, Uber and Spotify, or maybe like a stay-at-home binge package where they get a package of DoorDash, Xbox, Netflix, and Red Bull. So if you see, all of these brands are complementary, and a regular user would go and maybe shop at all of them if they want to, just plan out a good day, or maybe like enjoy a evening at their home. So
Mhm.
these essential things are making our app way more usable, as well as way more practical in terms of how it is perceived, both by the end users as well as the brands to come in and start operating with us. So currently, our Curious AI is in beta, but we have launched it for like I think 50% of our brands. On brands.fun side, we have already started giving out recommendation based on their activities on Twitter, Instagram, as well as on Facebook. And they get recommendations for the brands where we see that they have a much more better propensity of coming in and spending with them. So yeah, I think this in turn have given us a lot of boost in the last 2.5 months. We would like
Yeah.
to, just keep on maintaining this particular stream and get bigger and bigger brands in, so that both our end users as well as the whole token economics gains a lot from this.
Sure. And staying on the token itself, what's the roadmap for the token this year?
Yeah, so we have still not finalized the date of TG. Like we have confirmation from some of the exchanges to list us, but depending on like how the markets are performing, as well as in terms of how to maintain a sustainable price action on the token, we in turn will be releasing one another version of tokenomics that addresses these two issues, because we have a very unique business model where essentially we are bringing in the Web2 liquidity into Web3. It is
Yeah.
not just the Web3 liquidity that is floating from project to project. So this also accounts for a tokenomics model where we might choose to be a bit different from the current existing tokenomics models and have a much more value-based unlocked instead of a time-based unlock that we see in most of the tokenomics that are currently out there. So we will be releasing the new version of tokenomics maybe in 3 weeks' time.
Okay.
And
Very soon.
yeah, we are still like ideating, talking to our existing investors, taking feedback from our community to see that whether this sort of approach makes sense.
Okay, sounds good. And I believe you have a claim or an ability to claim your token for
Yes.
the audience. Yeah.
Yes, exactly. So for all the listeners of this particular stream, first of all, thanks a lot for taking out time, listening to the whole thing, getting to know about Quboid. So we in turn are opening up a very specific experience just for the listeners of this particular stream.
Oh.
So for the next 24 hours, you guys are going to get a secret code. And this particular secret code, you can go into the link and directly claim the QBE tokens. You can use these QBE tokens to play around our interfaces that we have built so far, or you can hold on to these QBE tokens and like use them as soon as we list our token post TG.
Okay.
So the code, yeah. So the code is definitely Dexalot, DEXALOTL. And I think we'll share these details in the group post this particular stream as well.
Yeah. We'll definitely post it on Twitter. And 24 hours. Okay, we're
Yep.
gonna have to jump on it. I'm gonna assume it's limited supply as well, right? So first come, first serve. Okay, sounds good.
Exactly.
Well, cool. It's been really good to hear from you. I mean, it's really exciting to hear a Web2 type of project trying to get into Web3, right? I think we certainly need more of that. I think all of us, sort of came into this space expecting more of a a Web2 type of experience in Web3, right? And it's not just meme coins. No issues with meme coins, but at the end of the day, we for a crypto to grow and for more people to come into this space, we need a project like yours. So it's really exciting to hear about it. And certainly we'd like you to come back in the future and keep us updated. We're looking forward to the listing on Dexalot as well. And we'll certainly go to your website and take a look and try to experience it as much as possible.
Thanks a lot for having me again, and always open for feedbacks, always open for any new brands that you guys think that, we can approach, get them listed, or, give a better wholesome experience for everyone in the community. Because I think like in this particular cycle, one thing we have experienced that in the initial cycle, like the whole infrastructure of blockchain was not like at that particular power where they can essentially absorb the enterprise volume as well as the sort of expectation that enterprise use cases need, right? And I think with the way in which Avalanche and other blockchain ecosystem have evolved, I think this is the right point where I think Web3 as an industry have done a great job in terms of having the underlying infrastructure. But we need, I think, 100 more consumer apps that make sense to average person on the street, right? And who in turn are looking for utilities and not just for price action. Price action is definitely entertaining and everyone needs it, but we still need those people who in turn, no matter whether it's a all-time high or maybe a gloomy day, they are still coming in and using the applications.
Yeah, sure. Oh, and before I let you go, I was told there was another question or a question that we have. So Miriam Tchera is asking, assuming I already have points with a brand, are they transferred one-to-one when they partner with you?
Yeah, so it depends on the brand strategy. So whenever a brand comes in and onboard us, they decide whether they want to do a 1:1 conversion or 1:X. So we take it on a case-by-case basis. What we make sure that all the tokens, all the points that essentially get converted into tokens are fully backed by the deferred liability or the portion of deferred liability that is staked with us.
Got it. Okay. There you go. All right, Prakar, thank you so much again for joining us. We look forward to the listing and having you come back throughout the year. Gokce, thank you so much for having me again. Good luck to everyone in the macro space. And we'll see you next time.
Yeah, see you everyone.
Okay,
bye-bye.